Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. The title of this video is how to combine two Fibonacci retracement levels like a pro. Alright? We can combine the 50% Fibonacci retracement level and the 61.8% Fibonacci retracement level. We can combine the 38.2% Fibonacci retracement level and the 23% Fibonacci retracement level. We can combine the 78% Fibonacci retracement level and the 61.8% Fibonacci retracement level. The purpose of this video is to explain to traders, okay, how one can combine two Fibonacci retracement level for day trading purposes and also for swing trading purposes like the pros. All right. So stay with us. In this video, I may try to speak slowly, all right, as I'm trying to communicate with you clearly, all right, to share with you one of my trading strategy that is a powerful trading strategy that you can also learn to apply. But before we continue, if you are a new trader, the best approach, open a demo account, okay, test it first, okay. Try it on paper, don't go and use it with real money, okay, until you own it, until you understand it, until you master it. That's the best approach, all right? So let's get started. I'm going to use two time frames to demonstrate this strategy to you. The first time frame that I'm going to use is the hourly chart, and then I will use also the daily chart, okay, to demonstrate to you how one can combine two Fibonacci retracement levels. The Fibonacci retracement level allow traders to detect, okay, support and resistance level. They are not a magic level. They are not. There's nothing special about the Fibonacci retracement level. So that's why we need to clear it right now. So you can go and draw all this level on your chart. There's nothing special about it, and it does not mean that the price will change direction there definitely. But I want to show you here what you need to look for, what you need to pay attention to, if you want to use, okay, two Fibonacci retracement level, working with the price alone, all right? You can use your technical indicator, but you want to keep your eyes on the price itself, which is the #1 indicator, all right? Keep eyes on the ball. All right, let's get started, all right? If you want to know more about the Fibonacci trading, you need to go to www.dayprotraders.com, all right? My name is Georges Beaulieu. I am the founder of dayprotrader.com, all right? So here we are. So I want to show you now what's happening here. First, I will use Fibonacci retracement tool. As you can see, the price went up from here. Are you with me? It went up all the way here, yes or no? It didn't hide it, all right? So it went up, yes or no? You can see on this is the hourly chart. We are looking at Boeing Epic Bravo Alpha BA, Boeing Corporation, listed on the Dow 30. This is American stock, all right? Because I trade American stock, all right? So it went up on this hourly chart all the way here. So I draw my Fibonacci retracement tool from the starting point to the ending point. The charting software that I'm using here, this is TC2000. All right, and then the price went down, okay? It went down all the way here. But I want you to pay attention to two levels, two Fibonacci retracement level, because we want to know how we can combine two Fibonacci retracement level. The first level that I want you to pay attention to is the 61.8% level. That's where I'm putting my horizontal line. I'll color that 61.8% Fibonacci retracement level into, okay, red. All right, red, okay, red, can you see red? That's my 61.8% Fibonacci retracement level. I'm going to draw another horizontal line. Are you with me? All right, pay attention carefully. All right, here it is. And I will color this time this one into orange. Beautiful color. So the top one here is that's the 50% Fibonacci retracement level. The one below is the 61.8% Fibonacci retracement level. As you can see, the price went up bullishly, which is telling us that the dominant force, all right, is bullish, all right, bullishly. See gap up even here, tall candle on the hourly chart. What I want you to remember, you need to pay attention carefully. We want to combine two Fibonacci retracement level. The strategy is very simple. When a price is coming down, when the price retracing, okay, the impulsive move, all right. If you understand a little bit of area wave, when the price correcting the previous move, all right, so the price went up, that's a kind of profit taking, all right. We don't want it to be 100% profit taking. We want it to be up to 60%, 78%, all right, profit taking, all right. The retracement, we want to look at how the price went down. The retracement, this is what we want to pay attention to. What we are looking for, we want the price to come down in 3 moves. I don't want to say waves, because if you don't understand area wave, you can get a bit in trouble. So we want the price to come down in 3 moves. You can see here, it went down and then went 1, 2, 3. This section here is a kind of consolidation. That's why I'm just calling 1, okay? So it went down. Do it like a chart. So what the price did, it went down, okay, and then it went up a little bit, went down, went up. But in this session, it stayed almost in the same place. So that's what I'm doing like this. 1, 2, all right, 3. That's what you are looking for. So you want to check whether the retracement is in 3 moves. That's what we are looking for. If it's not in 3 moves, be careful. All right, that's what I want to say to you. All right, so price goes up fast or price goes down fast, and then it retraces, okay, in 3 moves. So here it went up, then it went 1, 2, 3. This is what we are looking for. So the first thing you need to understand in this video about how to combine 2 Fibonacci retracement levels, we want a retracement to be divided into 3 moves or 3 waves. All right, are you with me? Are you with me? All right, so as you can see here, it went up fast and then it went out in 3 moves, 1, 2, 3. All right, but with more experience, you'll understand why I did it like this. I'll leave it like this for now. So we are watching 2 Fibonacci retracement level, the 61.8% and the 50% level. We want the retracement to go below, okay, the 61.8% Fibonacci retracement level, the lowest, all right, Fibonacci retracement level, all right, we want it to go below it. The second Fibonacci retracement, we want the retracement to go below it. So we want the price to go, in this instance, to go below the 61.8% level. We want to see that. We want it to go below the 61.8% level, and now to come and close that. You see here, it closed. You want a candle. If you're on the daily chart, it must close on the daily chart. If you're on the weekly chart, it must close on the weekly chart. If you're on the 30-minute chart, the candle must close above, okay, the first Fibonacci retracement level. In this case, the 50% Fibonacci retracement level. Because we are in an uptrend, the price went up first and then went down in 3 moves. Now it did below the second Fibonacci retracement level, the 61.8% level, and we want it now to come back above the first Fibonacci retracement level. In this instance, the 50% level. The candle must close. So if you are using this strategy, you see here, this candle here did not close above the orange line. So if you, when it was here, if you quickly jump onto it, that's very wrong. You want a candle to close nicely above the first Fibonacci retracement level. Here, this candle is closed on the hourly chart. You will buy. This is a bit risky trade for some traders, especially if you are day trading. Depending on your risk tolerance, you may have to use, okay, a multiple time frame trading method, which means you have to combine the hourly chart, 15-minute chart, and 3-minute chart, something like that, to enter this trade if you want to have the best entry point. Because it's a bit, you can see here, it went all the way to 135.54, okay, and then went down to the back again to the 134.38. It's quite a huge gap. All right. So if you enter after this candle is closed on above the first Fibonacci retracement level, you see that it went back down. You will be taken out first. So the best approach is to use, okay, either the TSCW24 or a multiple time frame trading method to enter the trade. So as the price close above the first Fibonacci retracement level, we want to look for opportunity to buy. As we buy here above, okay, the first Fibonacci retracement level, we must place our stop loss below this one here. So for this trade, It's more on the hourly chart. It's more about swing trading, because the stock is moving very fast. It's Boeing. It's quite expensive stock. So if you do not have a big trading account, you can be in trouble. So you will buy as soon as the candle close above the first Fibonacci retracement level, and you place your stop loss below this low here, and you let it run. As you can see, the price came back down. As a day trader, this is a huge gap, so you will be in trouble if you don't handle it properly with a multiple time frame trading method. So it pulled back but couldn't go below the previous low, and then quickly went back up. So the first thing that we are looking for, see a bullish move, and then the retracement should be in 3 moves. 1, 2, 3. It must be below the 61.8, and then we wait until the price return back above the 50% level and the candle is closed. At that point in time, we'll look for opportunity to buy. Right? It's better that I say look for opportunity to buy instead of saying buy, because if you buy straight away here on the hourly chart, as a day trader, you'll be in trouble. You see the price went back down before going up. As this candle closes, you are looking for opportunity to buy. The best place to place your stop loss, depending on your risk tolerance. So be careful. If you have a lot of money, you are throwing onto the money, say I can do this. Be careful. Don't trade like that, okay? Select the low risk entry point. So if you apply it carefully here, this is a successful trade. What we have done now, we have combined 2 Fibonacci retracement levels, the 50% Fibonacci retracement level and the 61.8% Fibonacci retracement level. Looking at the price itself, the internal waves, if you allow me to use that, how the price pull back should be in 3 moves. This is what we are looking for. Very important. If you pull back in 3 moves and it dip below the 61.8 and it goes back to close above the 50%, we are looking for opportunity to buy. Are you with me? Now the demonstration is completed now on the hourly chart. I invite you now to follow me. In the next, to follow me to the daily chart, and I'm going to demonstrate the same thing to you. I'm going to remove all my lines that I've drawn on the hourly chart. Now, as I explained to you, trading is about being multi-talented. So sometimes traders apply one trading method and they forget everything else that they have learned. That's not the best way to trade, all right? So you are learning one trading method today. But do not forget everything else that you have learned before, all right? Talking about multiple time frame trading, checking a higher time frame, all right? Do not make a trading decision on one single time frame. So you understand. So though we are applying this strategy, this is the setup that we have seen on the hourly chart, which I'll show you already. I'm showing you another, setup now on the daily chart. We want to follow, all right, the trading drill, all right? The setup, the signal, and the low risk entry point. The time of the day, all right? What type of trader we are, okay? We don't want to push it, all right? So this is very important because sometimes traders will go on YouTube, they learn one trading method, they like it, they are very enthusiastic about it, and they go and use it. But while they are applying the strategy, they forget everything else, or they don't want to look on their left-hand side, all right? In trading, we look on the left-hand side all the time. All right, and you want to look also into the higher time frame. All right. So multi-talented, trading. All right, you understand? So on the daily chart, I'm going to demonstrate the same thing to you. You can see here that the price went up, from here all the way up here. Yes or no? Yeah, it's clear. Went up, bullishly. See, now we want to see whether it come down into 3 moves. The retracement. That's what we are looking for. But sometimes you need to be careful. You see here, just do it like a child, okay? All right? Or you want me to call my son to do it, all right? So 1 move down, that's like a child, and then he went up again, all right? And then what he did, and then he went down. Now you can see that we on the daily chart here, he tries to change direction here. So you may think that this is completed, but this is what we are talking about, all right? If you're going to buy, all right, look here carefully, all right? Let me show you something, okay? You want to buy, you see, at least the price must break above the common sense trend line. It's very, very important. Don't buy below the bearish trend line, all right? Be very patient, okay? If you're doing that carefully, you avoid all sorts of mistakes. do not, okay, buy in a declining channel. If the, all right, you understand? This is something that this is what we are talking about. You are applying one strategy, don't forget everything else, okay? All right, so you want to be very patient, because if you rush into it, as you can see, you see it came down here, start going up here like this, all right? But this is not what we are looking for. We want it to come down in 3 moves. As you can see, went 1, 2, 3. Where are the 2 Fibonacci level that we are checking in this case? We are checking the 23.6%. Always we want to combine 2 Fibonacci retracement level. Here it is. You want to know the guidelines carefully. So in this case we are talking about a bullish trend. Price went up fast and then went retraces in 3 moves. 1, 2, 3. Now, in fact, I can talk about how we can combine Fibonacci and area wave, but I don't want to talk about area wave. That's why I say to you how to combine 2 Fibonacci retracement level like a pro. All right, that's all. Because some traders do not understand area wave, we don't want to confuse them. All right. Okay, so price went up and then pulled back in 3 moves. By pulling back in 3 moves, the price crosses 2 Fibonacci retracement level. The first one 23.6%. The second one, 38.2% level. As I've said, I've demonstrated to you on the hourly charts, all right? We were using the 50% and 61.8% level. This time we are using the 23.6% and 38.2% level. But we are following one principle. The retracement must be 3 moves, because why? It's an area wave principle. The minimum price move is what? Free. We know that. Minimum price move is free. Even if you are wrong, well, you will catch at least a little bit of price move, because if it's going to go 5 moves down and you follow this strategy, the price will go up a little bit before coming back down to form the 5 wave. So it's still valid strategy, working with the market principle instead of fighting or distorting the market. All right, went up and come back down, profit taking in 3 moves. Very important. 1, 2, 3. All right. Went down, went up, went down. That's how we want to see. Went down, went up, and went down again in 3 moves like that. All right. Nothing else. By crossing 2 Fibonacci retracement level. That's it. Very simple. All right. So now, as he crosses like this, we'll wait. You are waiting for it. You see here? This is a tricky one. You see here? It went down in 3 moves. If you were here, you see this kind of the red one here, followed by the green one here. But when we were here, it didn't cross 2 Fibonacci level. The price did cross only the 23.6% level. So this is not a valid strategy. All right. So though it came down 1, 2, 3, when we were here, it didn't cross 2 Fibonacci retracement level. All right. But when it came down all the way here, it crosses 2 Fibonacci retracement level. All right. So 3 moves down, but must cross 2 Fibonacci retracement level. Always. If you miss one step, go back and watch the video. All right. That's what I'm saying to you. Use a demo account, test it first. All right. Master it and then apply it. Okay. Finally, the price went a little bit. You can see this is on a daily chart. Can you follow me? All right. It dipped a little bit, so let's color it again. This time I use a different color. Use green and turquoise. Okay, that's the 38.2%. All right. And the one here is 23.6%, which I'll color now into turquoise. Okay. All right. So price went up and went down in 3 moves and crosses 2 Fibonacci retracement level. These are the conditions that we are looking for. Must dip. We prefer that it dip below the second retracement level. You see here, it went a little bit below it. We would prefer it to go deeper, all right, but a little bit is not too bad, all right. Now, what are we waiting for? We want the price to go above, okay, the first Fibonacci retracement level. Here it is. It went back above it. This is on the daily chart. We will wait until this candle is closed, completely closed. You see here? It's completely closed now. You don't chase it when it's halfway here. this day must close completely. Market will be closed. As you see like this, you know that I must look for opportunity to buy either for day trading or for swing trading. As a swing trader, you're going to need a bigger stop loss. If you want to use option, you have to buy call option. All right, price going up, you must pay attention to the resistance level. All right, so here somebody who is buying a call option will buy after this candle is closed. If you are swing trading, you will, if you have enough money to, depending on your risk tolerance, you buy straight away like this because you are aggressive swing trader. You buy straight away like this, but your stop loss must be below this low here, which is quite a huge stop loss. Okay. If you want to use a multiple time frame trading method to enter the trade carefully here from this daily chart, you may use the swing 240. This you may use the GSTWS S008, all right, to time your trade carefully. Or you may use another multiple time frame trading method, all right, to time your trade carefully. As always, when the price is going up, the price must be in a rising channel. Okay? So here is this, that's this candle close, where we will look for opportunity to buy. This is the strategy that we can use if we want to combine two Fibonacci retracement level like the Pro. All right, to summarize everything, I'm going to start drawing on this chart. So the demonstration that I did is a bullish demonstration. I'm going to draw now a line for a bearish demonstration. So during the downtrend, price went down, impulsive move down. Are you with me? We want to combine two Fibonacci. Then price rally a little bit. All right, you rally a little bit without canceling the prior move. Okay, this is the YouTube classroom. All right. Okay. So so it went down first and then pulled back in 3 move. While it's pulling, then it rallied back. You see, it went down and then rally in 3 move. Beautiful. Now we want it to cross 2 Fibonacci levels. So I'm just going to draw them on this chart like this for illustration purposes. This is a powerful trading method. So the first one, that's the first one. It's the second one here. All right. So in fact, I will put it a bit like this and like this. Okay. All right. So price went down and then it rallied in 3 move, crossing 2 Fibonacci retracement level. We wanted to go above the second Fibonacci retracement level, which it did here. It's a second Fibonacci retracement level. We are now in a downtrend. Are you following me? You want to go a little bit above it. If we are in an uptrend, we want it to go a little bit below the second one. But when we are in a downtrend, we want it to go a little bit above the second one, which is this one here. So what we are looking for is for the price to come back and close, okay, below the first Fibonacci retracement level. All right, to close. If you are in an uptrend, we will say to close above the first Fibonacci retracement level. All right, but if you are in a downtrend, we want it to close below the first Fibonacci retracement level. As the price closes below the first Fibonacci retracement level, this one here, we will sell, placing our stop loss, okay, above this high here, and we let it run. This method is a very powerful trading method, but we want the price to rally in 3 move and to cross 2 Fibonacci retracement level. So the first condition is the down move. The second condition is a retracement that is formed of a 3 move. All right. The third condition is that the price must cross 2 Fibonacci retracement level and going above, okay, the second Fibonacci retracement level and coming back and close below the first Fibonacci retracement level if we are selling, and then we will sell it and placing our stop loss above this high here. Depending on our risk tolerance, we may have to use a multiple time frame trading method to select the low risk entry points so we don't risk too much pips or risk too much money or expose our trading account to higher risks. In an uptrend, the strategy as I demonstrated to you here, we want the price to be bullish first, all right, and then the second condition that the price must, there should be a profit taking, and that profit taking, which is a pullback, should be formed of a three, okay, move or three waves, all right, okay, and then three move down like this, and then we want this profit taking to cross, okay, a 2 Fibonacci retracement level. This is the first Fibonacci retracement level, and this is the second Fibonacci retracement level. Price must be below the second Fibonacci retracement level and then come back and close above the first Fibonacci retracement level. At this point in time, we'll look for opportunity to buy. All right? It makes sense? It is also powerful. All right? Before I close this video, I want to show you something about this Boeing stock. I'll go quickly to the yearly chart. There's another thing I need to show you very fast. You can see that this is what we are talking about, a convergence signal at stochasticmarket.com. As you can see, the price form a V pattern, okay, kind of a V pattern here, all right? You see, if we do it like this, in fact, we can do it like this, okay? We can do it like this. This is a V, it went down and went like this, but I would prefer to put it here because, see here, you start rolling it down like this. And then I will just extend this one to the starting point here. And then we will draw what we call the neckline. All right? And then we will set the target like a professional. You see, right here. This will be our measuring stick. As the price crosses above the neckline, we will project it like this. In fact, I'll move my line to the side. You can see that this stock went above the target level. Now, there is a reason for it because you can see if we extend this drawing to the downside, we will have I use a conservative measuring stick. This is what you need to pay attention to. So as the price crosses the neckline, traders are bullish. And you see they bought this Boeing stock this year, and they were pushing it to the target level. The price always going from A to B. Now, this pattern is a very powerful pattern that even the algorithm are using, okay? The high frequency traders are using it, all right? The hedge funds are using it, the mutual funds are using it. So if I extend my V pattern to the bottom of the wick of this candle, you can see that I have a bigger measure, a longer measuring stick. Now the price is, you see, is in the target zone. This is what we call a convergence zone. There is a high chance that this stock, because the professional know, because they are buying, they are not just buying for the pleasure. They are buying from A to B. As the price approaches the target zone, they are willing to take some profit or secure their gain. And this is happening today. This setup is providing trader. You see today gap up a bit. This is today, push it a bit to hit the target level. You see, last time it was there, and today again they push it to the same level. Now on this, now I'm on the 5-minute chart. You can see that we have a triple top on the 5-minute chart. It's a multiple time frame trading method that I'm trying to explain to you. So from the yearly chart, I know where we are, that we are in a convergence point. If I'm day trading today this stock, I will be looking for opportunity to sell it instead of buying it if it stays below this level of 134.95. This video is about how to combine a 2 Fibonacci retracement level like the Pro. If you want to know more about Fibonacci trading, you need to go to www.dayprotraders.com. For all education about Area Wave, go to 24areawave.com. Until next time, enjoy yourself and be very happy. If you like this video, okay, rate it. If you don't like it, rate it too. Feel free to share it on YouTube, on Facebook, all right, on Twitter, okay, so other traders also may learn it for free. Why? The reason is that I decided to share this video with you so we can have another market. Now, I leave it to you. This interaction is very important for us that are, okay, content creators. We will like you to like it or to dislike it. Do you like it? Okay, like it. Do you dislike it? All right, dislike it. Do you have anything to say? Okay, put your comment below. But if you spam it, we will remove your comment. Thank you for watching, and we will speak to you very soon. We are the TSTWSYS008 traders. This video is about how to combine 2 Fibonacci retracement level like the Pro.